What's up, everybody? Back with another episode of Parliament of Pros with my good brother Chris, with the good tan from the lake. Yep. And we got some good stuff to cover today. You know, first off, Chris, how you doing, man? How back from the trip? How's everything?
Doing good. I spent actually even more sun out yesterday. I had to buy my oldest son a car, so spent a lot of time walking those concrete lots, and you just get melted out there. But then we also have like the Sahara desert dust blowing in, and it's been causing problems with me choking on it. So I apologize in advance if I do an extra few coughs tonight. So
No worries. You walking those lots with a gas mask?
I should have. Number one, it would have just looked awesome. But number two, it would have maybe helped with the ability to breathe. So it's all good.
Might help you get a discount too.
How about I come look me in my mask and tell me the price? Yeah.
We're actually doing 75% off, Claire. Just take it. Guys, big news today. Robinhood officially launched their layer 2 that is built on Arbitrum. And they did like this cool presentation that looked like it was like in some random church in Rome where the CEO was dressed like he was a Civil War leader. And they have a couple of pretty cool products. They have a yield product where they're saying they're going to be paying out 7% yield. They are using Morpho on the back end. So I don't know how Morpho pulled that off. They're in bed with Robinhood and Coinbase. Just got both the girls right next to them. And Morpho is kind of just like establishing themselves as like the premier money market platform. Aave has to be shaking in their boots, especially after the hack. They also have like this cool AI component where typically you can set up limit orders and do things like that, but they were showing in their presentation like, oh, you can prompt this and say, buy this asset and sell it at this time and do all sorts of like cool things. And they also said that they have the biggest insurance policy for crypto ever in history, ensuring people that things are safe. So they originally said that they were launching the chain like a year ago, but now it finally went live today. And yeah, the presentation was really, really cool. They even have an agentic credit card where you can use the card and it's kind of like connected with everything. And I'm going to be doing a video over the holiday weekend comparing Robinhood's L2 to base L2 because they are a pretty big competitor. Robinhood has like a big, I think 28 million retail users, but mainly stocks. And Coinbase has most of the crypto users. And Robinhood is really spearheading tokenizing RWAs and stocks and getting them on chain. Coinbase is trying to do it too, but Robinhood, they've launched this to I forget 20 something different countries, not just the EU now. Like they originally were just launching the EU, but now they have it in multiple different countries. And with the 7% APY yield product, they're rolling that out to, I think they said 1,000 Americans to start, which makes sense. You can't really sustain 7%. So like, let's just kind of roll this out slowly. Mm-hmm. And they also said that for like the first, I think they said 3 months, no gas fees on the house, which is pretty cool.
Wow.
And yeah, that's pretty dope. And, you know, you can see some of the stock tokens that they have on here already. I'm excited to see Uniswap is integrated onto there, Uniswap and Unichain, which is cool. They're like the premier DEX on there. So they're partnering with Uniswap. So I'm excited to see what the farms are like here in the near future. And if we go over to Dune Analytics, they already have some data shown on here. So right now they have 134 million, which is like you can call it a TVL, the total asset market cap. 103 million of that is stable coins, 12.3 million in tokenized value. And ecosystem TVL is actually, it seems like that's the true TVL. Usually Dune Analytics is a little different because this is Robinhood. So, you know, I'm just looking at all this stuff today. Like it just launched and was reading up on it like a few hours ago and I wanted to make sure I was prepared to have it for this call. But you can just look at the landscape and everything they have on here. They have their own stable coin on here as well. So yeah, lots of cool stuff. So Base, I'm glad that they're doing this because once projects have competitors, I think it's going to light a fire under Base's ass so that they can like, you know, get their ducks in a row. AI is going to be a huge thing that they're competing with. You know, Base did launch the X402 upgrade that allows AI agents to transact online. And they have the two EIP proposals that one is an escrow platform so that AI agents can't screw each other over. And the other one is basically like a credit score rating for AI agents. So that way, once they're doing work with each other, they kind of develop a reputation. So that way they know who's doing good work, who's not, who to work with, or what to work with as an agent and what not to. So I'm interested to see how this is going to play out over the past year. There is even a meme coin little frenzy that's kind of launching on Robinhood. My good buddy who I do the base show with, Base Junkie, was telling me about, what did he say this token was called? I didn't buy it, nor am I, because I remember when Kraken launched their Ink chain, I bought a few meme coins on there and it didn't pan out too well. But Robinhood is much more established than Kraken. It's called Cash Cat. And you can see like they have the logo here. So the market cap right now is 3.9 million. It's already dropped 31%. And it looks like we can't find the page anymore. Let's see if we type in Robinhood, if we can kind of get like some kind of index. Nope, it's just a bunch of tokens. But yeah, and man, any thoughts on this and how it can like kind of play out in the future? This is some pretty big stuff, and I really love that they launched it in current market conditions. It just kind of shows that, you know, you don't look at tech products and in TradFi, people and companies aren't only launching things during bull markets. Like they're launching stuff all the time, and I like to see that crypto is kind of getting there with a project like Robinhood launching something this monumental. While Bitcoin is hovering around 58 to 60K.
Yeah, I'm trying to figure out, besides Robinhood, like who's going to use it and why is that chain needed?
You said besides Robinhood, who's going to use it?
Besides Robinhood, yeah. Who's going to jump over there and start doing something on the chain? Are there trading benefits or any sort of benefits for being on that chain directly with the Robinhood app or the Robinhood company or anything like that?
Well, the insurance is a big thing, right? Because we know what's up with the hacks.
Yeah.
The yield that they're paying out, we'll see how that is sustained. And the fact that they're allowing people in multiple countries to get access to tokenized stocks, specifically tokenized American stock, I think can attract a lot of folks as well.
Yeah. So we'll see. I mean, it's tiny. I've been burnt before jumping onto other newly launched chains, even going for blue chips over there, because the volume just doesn't sustain itself very well over a lot of time. So to me, that's the biggest risk. And then also, what kind of slippage are we going to be looking at when we, bridge over to their chain? Because if there's low liquidity in the destination, you could lose a lot of money due to those types of things. So, I mean, it could be great, but they're going to have to do a lot to attract people to leave where they've already spent all the programming hours and all that other stuff and get them built up or integrated with their chain. So
I agree. There's can't be drinking the Kool-Aid all the time. You got to drink it and kind of look at what's in the bottom of the cup to see what's kind of accumulating.
Even a sip will kill you. So
sip will kill you.
So just got to see, Monad and Plasma are still putting out some really huge incentives for providing liquidity on those chains, even though the chains aren't doing much anymore. The same thing can be over here with Robinhood. They could be giving out these huge incentives, but like we saw on Sonic, like as soon as the incentives are over, 3/4 of the traffic just leaves. So I'm not sure how it's going to fare, but it's cool. They launched it and they fulfilled their promise. No doubt about that.
Yeah, it's the L1, L2 war is tough. It's like, I think it's a big testament to Ethereum as well, because you have a lot of companies that's going to go on chain. Everyone's going to eventually go on chain, and they're either going to launch on ETH as an L2, or they're going to have their own permission or permissionless L1. So I think it's a big testament to ETH that someone like Robinhood chose to build. And hey, good stuff on Arbitrum. Arbitrum is probably like, whoo, we needed that, especially given that Coinbase announced back in February that the base chain is going to become its own thing. They're not going to be building on the OP stack. They're actually migrating off the OP stack. I'm not even sure if they can be considered the super chain anymore.
OP, yeah. They had a little resurgence in the OP token there for a minute, but I think that's over now.
Yeah, I think it's been over for a while, but I don't think that the OP project is over. I did get to talk to the founders at ETHConf, and saying they're pitching enterprises now, and they're onboarding enterprises on chain to build on chain. So it's just like, we'll just have to see. We'll just have to see. Okay, so I do want to take a look at this here. So they had the jobs report come out, and there was 57,000 jobs added versus the 115K that was expected. 4.2% unemployment rate, mainly due to a big decline in the labor force. So the job market is stable, which the Fed likes, but it's not as good for America because the jobs aren't growing with the inflation rate. There's kind of been an uptick with inflation, and this is, nothing's all good, nothing's all bad. This is good from a standpoint of like, okay, rate hike is a lot lower now. It was up on Polymarket like 44% last week, but now that's went down with this recent job report. And if we just kind of open this chart, you can kind of see how the jobs have been added and how there's been like a major decline pretty much all year. So this isn't good, obviously, because like, people need jobs, but I also want low rates so our bags can pump. So I'm kind of in the middle. What's your thoughts?
Yeah, anything makes my bag pump, I'm for it.
Exactly.
I got bills to pay and life goals to hit. So.
Fact. I'm just a man, nothing more, nothing less.
That's right. That's right.
We've been talking about for the past couple weeks that we are expecting markets to go lower, and we're going to open the charts, and I'm going to give you guys even more evidence as to why I think that. But we just had the largest 30-day whale accumulation since 2013 of Bitcoin. All right, 125,000 Bitcoin has been accumulated, give or take, over the past 30 days. But Bitcoin is still dropping. Why is this? You probably think, well, Bitcoin isn't all about at least the price. It isn't. The price isn't determined by supply and demand right now. We put out a post on this on Instagram like a few months ago. For every one Bitcoin, you have 9 different derivative contracts to represent it. And Bitcoin's price is determined from buying and selling on spot exchanges, which a very small amount of Bitcoin gets bought and sold on spot exchanges. You have a lot of stuff that happens OTC, pretty much off the books, where you can move Bitcoin without it affecting the price. So for everyone who's watching, stats like this are good, but you just have to keep in mind these whales, aka smart money, just because they're buying doesn't mean it's the bottom. No one can pick the bottom, but when prices are low and discounted like this, they're going to buy. They're not trying to call the exact bottom, but when prices are low, they start to DCA in, right? And with the Clarity Act going to get passed latest next year, and we have things like Robinhood launching their token and just all the things that's happening. I'm not surprised to see this, and I'm also not surprised to see that it's happening while Bitcoin is still dropping. Chris, you got any thoughts on that?
No, you said it all right there.
Yeah. All right. Another thing. So guys, happy Q3. July 1st marked the start of Q3. And this is a cool fact to, give us some hopium going into July. Bitcoin has never actually followed a negative June with a negative July. We had a negative June, and out of the 7 negative Junes, there has been positive Julys after a negative June every single time, 7 out of 7 times. The average July percentage increase is 13.9%, while the median July increase is 16.8%. Hey, I remember there was a time, and guys, I'm not trying to rain on the old parade here. This is a cool stat, but the longer you're in crypto, like we were just talking about, one sip can kill you. We took a couple sips and it's made us sick, but we just kind of developed antibodies, so to speak. And there's been a lot of times where there's been stats such as these that never get broken until they do. So my opinion is that I wouldn't be surprised if this is the first time we had a negative July after having a negative June. Just because like the Clarity Act, a lot of people think it's going to get passed in August, if not August, probably sometime next year. And a lot of the funds and institutional investors and fund managers, etc., they like to go on vacation with their family. They're people too. So they kind of log off, they de-risk, they sell their Bitcoin, they, get into stables, they try to get some yield here and there. And Bitcoin is at a crucial zone. So, Chris, what do you think about this chart, man? You drinking the hopium, or what do you echo my sentiment?
Well, I'm looking at it, and that number for June's kind of hard to read on your screen, but I think it's a negative, what, 20%?
Negative 20.48%.
Yeah. So thinking like a trader for a moment, I'm thinking we're going to have a positive month. It's going following the principle of mean reversion. I don't necessarily believe it's going to be July is going to be like a positive 10% or a positive 12% a month, although it could be. But after having such a large drawdown of negative 20% in the price of Bitcoin, there's going to be some bounce back. The question is it going to be a bounce back that lasts for the entire month or just the first couple of weeks? We don't really know. But that's how I'm looking at the chart. And then, I mean, patterns are great, but a lot of these patterns were also built before institutions got in on the game. So they've come in, and we've seen time and time again how institutions have wrecked the previous patterns. Not that they're trying to wreck the previous pattern, it's just that they do over the course of them doing business. So all that to say, it's anybody's guess, and I really don't know. I'm just going to farm the markets as I see them at the time. So
that is a very solid analysis, and I just want to kind of pull up a little point on mean reversion, because a lot of people don't know what that is. Mean reversion is actually one of my favorite sayings. I like to say it in real life too. Like, when things are getting bad, I'm like, oh, things will always return to the mean. So the mean is kind of like the statistical average. So in this line, this is like the mean, and I forget what median and mode is. One is up, one is down, I'm guessing. But things go up, things go down, but there's always a statistical average that things return to. And what Kris is saying, that, you know, we've reverted from the mean a lot, and he thinks that in July, from a trader standpoint, that things will return to it. I'm hoping that it does, and I think it's highly possible that it does as well. And right now, even if we look at Bitcoin's chart, we are above 61K, which is good. If we hold the 60K level, I think that's really, really good. But if I look at this chart right here, I'm not saying, I don't think we're out of the woods until we break above this purple line, putting my trader hat on as well. And this purple line, we need to, I wouldn't be surprised, even if we get here to 70,000, 72K, is still testing this trend line and our 200-day moving average as resistance. And I think if we hit that and come back down, we'll probably come back down to around 53. That's the next major support level right here, 53. And I think a lot of buyers will buy that up. And I think that could be the bottom. But, you know, there could be a wick down to 40, as we were saying last week. But until we get above 75 and we kind of get a nice close above this level, the trend is your friend. We've been inside of this channel since last August, technically last May, just going up and down. And until we break out of it, I'm not going to be optimistic for the future. And that can happen any day, especially with the clarity. We got midterms coming. And a lot of people are saying that, oh, Donald Trump got in and he was excited about the Clarity Act, but this and this. And also with Kevin Warsh, he was handpicked by Donald Trump. He was talking so bad about Jerome Powell and saying how late they were in lowering rate. And he basically pitched the idea that when he would get in, he would be lowering rates immediately and fast and all that. And that hasn't happened. So if I put my tinfoil hat on, I think it could be a ploy to where they're, you know, trying to keep rates steady. But when midterms come along, because voters, they have the memory of a goldfish. They forget fast. If they start making things happen like around that time, it'll make people feel like, oh, they're doing all this stuff. Let me go ahead and vote accordingly. So, yeah, that's my thoughts on that. Kris, what do you think?
yeah, I actually think that we're kind of in a bear market for Bitcoin, even higher than the 75K. But from all the different sources that I research all the time, I definitely think a wick below that, you know, in the 40s is a possibility. Now, it is going to be a wick, and a wick means that you're only there like momentarily, but it's there long enough to wreck a lot of people that have long set up, right? So,
yeah, like one of these right here.
Yep. So they just go down, come right back up, and then it really depends on like if you leverage your Bitcoin or anything like that, that they would liquidate you and take your funds from you. That there's a lot of market makers that make their money that way. So I'm interested to see the price. Right. I mean, the last 2 days, the price has been going back up, which has been a little refreshing. and I hope it continues. But we'll see. That we're going into the 3-day weekend for the U.S. And a lot of us think it's going to be a slow drip down over this 3-day weekend. So we'll be interested to see what happens Monday and Tuesday. So when the markets open back up,
we'll see what happens. Everything's still looking the same with the central bank balance sheet and M2 money supply. This thing is just climbing higher bit by bit, not showing any signs of slowing down. We got gold. It's been kind of making a recovery, but I think it's just going up to, it might come up to retest this and keep dropping. I think that while inflation is kind of ticking upward, I think it's still trending downward, but I don't think that's going to remain the same for a while because we're still printing money. So it's kind of hard to keep inflation under control if you're still printing money and rates are, not super high. So it's not sucking liquidity out of the system. We got oil dropping along with gas prices, which is good. $70 a barrel. The S&P still consolidating around all-time highs. Dow Jones hit a new all-time high today. NASDAQ consolidating around all-time high levels. And we just went over Bitcoin. I want to give you guys an interesting stat around Ethereum. The whole supply and demand thing. Bitcoin is capped at the supply, but I was doing a little bit of research today, and it's just good for everyone to know. So right now we have 2,900 ETH currently getting printed out of thin air every day and added to the supply. And this is a huge problem because, supply and demand, obviously. I think if ETH is going to succeed from a price standpoint, it has to be deflationary. And right now we have 2,900 ETH getting created every day, but only 60 ETH getting burned every day. And Tom Lee, who's like the Michael Saylor of Ethereum, he's buying 30K ETH every other week. And that's barely making a dent as there's 20K new ETH being added to the supply every week. And at current prices, that's $143 million in ETH getting minted out of thin air, right? So, if ETH had a hard cap supply like Bitcoin, it would be doing a lot better right now just because of the usage. And I think the ETH to BTC ratio would be flipped upside down, but it's going to be hard for ETH to really make a dent with that looming over his head. But with things happening like Robinhood launching their chain on Arbitrum, it is good, but the gas fees are so low because it's on a layer 2. So it's like, it's not really translating that much value to ETH. ETH makes most of its money when chains are built on the layer 1, not the L2, but the incentives aren't really aligned to build on the L1 if it's like a retail application that you want millions of people to use because you want gas fees to be low and you want it to be fast. So ETH is kind of in, like we've been saying for the past few years, is still kind of in an identity crisis.
Yep, definitely. I was just comparing the inflation rate of ETH versus Solana.
What's the difference?
So Solana's daily inflation rate is roughly 8 to 15 times higher than Ethereum's daily inflation rate. However, Solana's rate is completely predictable and gradually decreasing by design, whereas Ethereum's rate fluctuates daily based on how much gas is burned on the network.
Yep.
So Solana deflationary potential can turn negative during high traffic. So when ETH has super high periods of traffic, it can actually become deflationary for a time to burn out some extra ETH supplies. But Ethereum is doing somewhere current annual net inflation between 0.23% and 0.5% annually, and Solana is 3.82% annually.
Interesting.
That's a huge difference.
Yeah, it is. And a lot. If we look at the Solana chart, I think it's actually a pretty good time to start accumulating some Solana because we finally broke out of this trend that we've been in since last October, and we just had a breakout for the very first time. Right.
Mm-hmm, mm-hmm.
Again, trading is all about probability. So when things like this happen, it's just a high probability that we can keep going up. It's not a guarantee. So if we look here, we broke out of the trend and we broke out of our 62, which is our rolling Fibonacci. And we were talking about mean reversion. This kind of acts as the mean more than the 200, right? The 200 is more like a mean that's further away. So as you can see, the 200 is still looming over its head. And when Solana's price is going up, we have the 62 always on top of the 200. So the 200 is still on top of the 62. Like you saw right here, the 62 was well above it. And then when it dropped, it was below. well above it when it went up. Same thing here. So until these lines cross and we have them as support and not resistance, we're not out of the woods. But I can definitely see a nice little short-term pump for Solana going up to around $100.
That's where I have all my farms set up right now. They've been paying out really well this week.
Yeah. What's been your favorite farms of the week?
Hype. I mean, it's a broken record, but it's true. That one's been doing fantastic. So Solana's yield has really picked up this week. You know, we've been averaging on a daily basis like 0.2, 0.13. But this week, ever since June 28th, we've been able to get 0.29% every single day with a nice looking range. And it's because Sol had a very, very tight range it was staying within, which made it super easy to farm. So it wasn't until this morning where it broke out of that range decisively, and now we're having to rearrange things. But that one at 0.29, 0.3% a day on that has been fantastic. Over at our hype farms, we have hype range of like $20 that we're farming, which is more than enough, way more than enough. That's actually pretty conservative range.
Which one you want? USD?
USDC. And we're getting 0.45% on average per day. So that one's even better. I know it's a small cap, but the Venice AI token, which is VVV, has been given 0.41% a day on average. Paired that with some Ethereum. So that one's working out really well. One thing that has not been working well is BNB. And I know BNB's been struggling with price, especially because they were one of the crypto platforms that is not allowed to operate in Europe as of July 1st because of the MiCA license thing.
Typical Binance fashion.
Yeah, but out of like the thousands of protocols that were operating in Europe, only about 200 of them completed the MiCA registration. So, like, in fact, Tether refused to comply with MiCA regulations because of some of the things that it said. And I'm not sure on the specifics of that, but that's what their CEO came out and said, that's why they chose not to register. So, but anyway, the BNB farm's not performing very well at all right now. There was a lot of selling this week. So I'm sure they have a plan to boost that back up. It's just not there yet. Zcash volume has been low. Tau price recovery has been kind of slow, kind of hit a floor at 200. One of my favorite protocols, Sky, is almost completely recovered from its most recent dip. It dipped all the way down to under 5 pennies per token, and now we're almost back up to 6 pennies already. So they have a really nice business model, and they're one of the most profitable stablecoin and longest running stablecoin programs out there. So
are they still DAI, or they converted it to the other one?
Well, they still have the DAI token, and they still make a lot of money with the DAI token, with how they back the DAI token. But they launched USDS for USD Sky, and they don't make quite as much money on that token, but it's getting a lot more adoption than just the DAI token is. So yeah, that's about it for the hottest of the hot. I mean, I'm doing okay in several other pools and stuff like that, but those are the hottest ones. Yeah, I've started doing a lot more researching into yield looping, especially when it comes to stable coins. I started researching it when STRC, the dividend paying ETF from MicroStrategy, they came out with it. Several tokens came out right as STRC went live because they were using the STRC dividends to make money for their yield-bearing stablecoins. And I was like, oh, that's interesting. So then I got onto Pendle and made myself a loop over there, and everything was great until utilization shot through the roof and just killed all the interest rate arbitrage. So it actually became not profitable to be in that yield loop, even though the underlying backing dividend product was still paying as it was supposed to. So I said, well, forget that. I like the looping idea, but I'm not going to do it with something that's backed by digital asset treasuries. So I went and found another stable coin it's by the protocol, and they do on-chain insurance. And then I found over on Morpho, you can loop USD with USDT or USDC and make a loop. And I've looped it up to where it's pretty much the two stable coins, and it's making projected like 22% a year on stable coins. And there's no expiration on that. All you really have to do is just monitor interest rates and make sure they stay exactly how you designed it, and or close enough, and then you'll hit your rates by the end of the year. So I've been looking into more and more opportunities like that. I've come across 3 different tools that really help with doing instant looping. One of them happens to be DeFi Saver, which because you can use their tool on Aave or on any of the lending sites directly. The other ones are like yields.io, which is really cool, and then iPour and even Euler. All of those sites will help you do these loops to take advantage of the interest rate arbitrage. So it is still producing a yield, but it's a yield of interest versus a yield of trading fees from our traditional farms. And so far, I haven't found any looping that has paid out more than our traditional farming, but it's also a whole lot less risk if all you're interested in doing is stable coins. So I put some of my stable coins into the loop, but overwhelmingly I have more and more in our traditional farms. But that's what I've been researching recently. So, and I finished right when you were chugging that drink, so I timed it perfectly.
Yeah, no, I think that's a very healthy way to go about it. You never want to put all your eggs in one basket. So it's good to have some stables working, and it's good to have your blue chips and your alts working, but not all in the same place.
No, absolutely not. Yeah, these are on Morpho, and and Morpho's, like you said, is growing leaps and bounds. So I'm very confident that market is going to stay. All I have to do is watch interest rates and watch utilization. But that's the same with any borrowing and lending site across the board. So it's the normal risk. So.
Yeah, and I love that Robinhood got such good insurance, because I think it's gonna force the insurance industry to grow in 2 ways. One, from a competitive standpoint, because people want to be safe, especially given all the hacks. And 2, no one wants to be first, no one wants to be last. And I think the fact that Robinhood got such great insurance policies, now other insurance companies are going to feel more comfortable insuring crypto products and services. So I think that's a huge step in the right direction.
Absolutely. Right now, there's only been 1 or 2 main ones in the industry, so they could really, jack up the rates whenever they want to. It's almost like their own version of yield farming with what they were charging for for the interest rates for the insurance. Crypto insurance doesn't protect you in the case of the value of your investments going down, just like any financial insurance. It protects you for the loss of your investment. So they calculate loss not based on US dollar value, but based on token count. So if you had 2 Bitcoin that you had placed somewhere for, as your own personal bank in DeFi, and something happened to that protocol and the 2 Bitcoin got stolen, then if you had the insurance on it, then they would send you 2 Bitcoin to replace the 2 Bitcoin that were lost, regardless of what the price of Bitcoin is. So they've even started doing life insurance in Bitcoin. There's a protocol that does that. So you can pay for your Bitcoin life insurance in Bitcoin, and then whenever you pass on, they'll provide the agreed upon Bitcoin to your beneficiaries. And that's all on chain as well.
Bitcoin life.
It's not called that, but I guess it could
be. It should be.
So.
No, that's good stuff. That's good stuff. Well, I think that pretty much wraps her up. A lot of good stuff today. I'm just happy to see that we're building the bear. We made a song called Building the Bear. So it's good to see that we're building the bear, and that, these TradFi companies still believe in the space and are just bringing insurance, bringing eyeballs, bringing liquidity. And now all we need is the regulation. And I think we'll be off to the races. to melt faces.
Well, I'm glad you said building the bear instead of build a bear, because then you'd have problems. So
Exactly.
they'd come after you for trademark infringement.
Yeah, no, we don't want that. All right, guys, if you got value, like, comment, subscribe, share with a friend, join our free community, sign up for an upcoming cohort of ours, as we're always trying to do our best to onboard the next billion. And we have scholarships and cool sponsors. So with that, thank you guys for watching, and we'll see y'all in the next one.
Peace out.